Hello everybody and welcome back to Trading with CJ. Now today we've got something slightly different for you. I've got an animation where I'm going to be covering what a dividend is and why it's a great way of earning that passive income. Now I just want to say that I'm not a financial advisor. This video is purely for entertainment purposes. So you should always do your own research whenever investing into the stock market. With that being said, I'd also really appreciate if you hit the like button and subscribe below. It's appreciated and it helps support my channel. So let's get into the video.
Now, has there ever been a more scary idea than playing the stock market? Your life savings, education or retirement fund, they're not something to play with. Do large companies play with the pensions that they are responsible for? The reality is that the stock market is not a game. It is a platform for investing in great companies to then receive a profit on their future earnings, and it can be fun and exciting, but it shouldn't be played around with. One of the greatest blessings ever discovered for investors are companies in the stock market that pay a dividend to their shareholders year after year, and a lot of the companies also tend to grow that dividend year after year. All investors talk about growth and all investors talk about income, but what we want to talk about is the growth of income. So let's think about if you own your own property and you're renting it out. You know what you've paid for that property, but your focus is on the rental income and you want to make sure the building is running well enough to see the rents grow year after year. The property itself might go up and down in value in different months or years, but you probably won't even notice that, let alone care. You care about the growing regular income from the rent that you are receiving. Now this also means growth in value, because if you have an investment which is growing cash that is then returned to its shareholder, this will eventually see its overall value grow higher as well. Values may move up and down at different times, as is the case with most investments. But if you have an asset growing cash that it's generating, that will then increase in value through time. With dividend growth stocks, you get all of the above: growth, income and value. By investing in well-managed companies, growing greater profits, and from those earnings paying its shareholders a dividend, this allows you to benefit from rewards from this investment continuously. Now, if you don't need that cash, you can reinvest the dividends that you received into more shares into the company, creating what is known as compounding, which is one of the world's greatest wealth building practices. More dividends buy more shares, which themselves will pay even more dividends. Einstein's eighth wonder of the world. Now if you do need more cash to hand, then when you receive a dividend, you can use it, buy shopping or book a holiday, whatever you like. The stock prices may be going up and down, but if you're just using the dividends to spend money and not selling shares that may actually be down in price, you avoid the great risk of a negative or bear market tearing away at your investment. Dividend growth stocks are considered tax efficient, meaning that the dividends are generally taxed at a lower rate than the income from real estate or bonds. The main thing is that the company's interest is the same as yours. Companies are unlikely to grow dividends if their future projections are looking questionable. If they are increasing their dividend, then that is a statement that you can believe their numbers and the company's strategy is on track, meaning long-term more benefits for you. So, can wonderful companies with strong balance sheets and history of growing dividends still see up and down moments in their stock prices? Well, of course they can, but as a dividend growth investor, you can benefit from that by buying more shares and reinvesting your dividends at lower prices. And as an income investor, you will receive a raise year after year, because your income will still grow regardless of the market condition. Do bonds offer income growth? No, because they are fixed. That's why they call it fixed income. What about a stock with no dividend? Well, you're just relying on the market pushing up the price. Now remember, investing is not a game. Do not try to play the stock market. If you can find a stock with great potential growth and a continuous paying dividend, then dividend investing is a great way of growing your income year on year.
So I hope you found this helpful. Now, as you can see, dividend investing is a great way of earning that passive income. Some companies pay you as much as 5 or even 10% per year on your shares, which can obviously add up to be quite a lot. If you'd like to start investing, check out the link in the description below, and if you deposit £1, you'll get a free share worth up to £100. Now, if you found anything in this video useful, please like, subscribe to my channel. Also, check out some of my other videos. All support is appreciated. Now, thanks for watching, and until next time,